Welcome to another Leumi Financial Corner. With us once again, Michael Zaremski, head of U.S. Private Banking for Bank Leumi USA, a member of the investment committee for Leumi Investment Services. Michael, good to have you back. How are you holding out?
Doing well, Zev. Good to be back again, and hope everything is good on your end.
Thank you. So, I guess what I want to talk to you about, we're getting a little bit of mixed signals. The economy still has not rebounded, has not been opened up. They're talking about doing so, yet we find the equity markets are doing better than they were previously. Do they know something we don't know about?
Zev, that's an excellent question, and I think that's one that's perplexing a lot of people right now, both on Main Street and on Wall Street. And I think you have a little bit of a breakdown or a dichotomy between what's happening, in the private sector, which is largely small business, versus what you're seeing happening kind of in the public sector, which is the equity markets. So first off, let me also just say that, a lot of the views that are being expressed are my views, not necessarily those of the bank. But what we're seeing right now is, in my opinion, the equity markets are really starting to have some anticipation of what the world will look like post-COVID. But you're also seeing that a lot of it is being driven by what's happening with the Fed. The other side of it, again, small business, there are still elements of the economy that we expect to be under a lot of pressure that will likely continue, but those elements are largely, like I said, small businesses that are not investable or not really part of the public equity markets. Eventually, there has to be a correlation between the two, so you can't have one side you can't have the public markets doing really, really well if everybody is not in business on the private side, because again, ultimately our economy is really fueled and driven by small business. But for small periods of time, they certainly can diverge, and I think that we're seeing that right now. And I believe a lot of that divergence is really being created, by the Fed. And there's the old adage in the market of don't fight the Fed. And it's pretty clear at this point that the Fed is all in terms of providing as much liquidity and as much stability in the market as possible. We've seen their balance sheet grow from $4 trillion up to $6 trillion, and there's expectations that the balance sheet may grow up to $12 trillion. The Fed has made announcements in terms of what they're willing to buy, what they'll engage in the markets, and without actually even starting to implement any of those programs, you've seen the liquidity in the market respond pretty significantly, if not quite come all the way back to normal.
In your professional opinion, the money that's supposed to be allocated to small businesses, which some big companies benefited from too, especially in the first go-around, how important of a factor is it getting us back on track financially during this time?
Well, I think that what we're talking about for the Small Business Association PPP loan program, of which Leumi was definitely a participant in, and very proudly so, really designed to put money in the pockets of people, individuals with small businesses. That is really designed as, let's say, the ultimate bridge loan. So the goal eventually is for people to be opened back up in business, and there's not enough money that the Treasury can produce or print that will allow that to continue to go on infinitely or for significantly much longer. So ultimately the goal is really, how does the economy open? And I think what we're really starting to see, and again, I think some of this is the vision of when you're in New York, which is, again, the most afflicted market by the virus, also a very heavy media market, and also a very intense financial services market, the view around the country remains very, very different. And I think when you look at New York State as an example, while New York City and downstate represents a significant portion of the GDP, it represents about 93% of the cases of coronavirus in the state. The rest of the state certainly accounts for more than 7% of statewide GDP. So again, there's an imbalance that's heavily skewed to the New York area. When we talk about opening up of the economy and how these small businesses will eventually rebound, I think you also have to look at some of the statistics. There are, government suggestions on what it takes to open up the economy. And two of the things that are being tracked is the 14-day downward trajectory in virus, as well as the 14-day downward trajectory in positive testing. And again, we don't really see this so much in New York because the numbers are so large. But if you look at the 50 states plus Washington, D.C. and Puerto Rico, 22 of those 52 are seeing a 14-day downward trajectory New York included in that list. And then when you look at the 14-day downward trend in positive testing, again, New York in that list, and 25 of the 52 territories being surveyed account for that. We've already started to see some states start to open up again with restrictions, with rules, with social distancing in place. But I think what we're really continuing to see, and this feeds on some of the conversations we've had in prior weeks, a lot of the worst-case scenarios are coming off the table as we are starting to move towards a normalization or a beginning of the process of normalizing to a new level in terms of where we are in the economy. I also saw a stat that said 18% of the population is currently no longer under restriction, and another 18% of the U.S. population will be coming off restriction within the next week or two. So even though that, again, may not necessarily represent a third of GDP production, it does represent about a third of the population of the country. So again, not 100%, not all the way back to normal, but we're seeing the beginnings of it. And I think what that also talks to is what does the new normal look like, as everybody suggests. And again, I think looking at data is so interesting. People talk about where the stock market is right now, and again, depending upon which gauge you look at, year to date, the S&P is down under 10%. The NASDAQ is down less than 1% as we're speaking, and it's a very interesting average. So the NASDAQ and the S&P, I think, highlight to you the old economy and the new economy. And a lot of what we talked about prior is entering into the information age, entering into the digital world. And the companies that are most geared and most primed for that, I think, are the companies that are continuing to do well. I looked this earlier today, and Microsoft was up almost 10% year to date. Again, you think about Microsoft's business in terms of being a leader in information technology, iCloud software, and those elements of business. Their business is very different than an energy company, which is really facing a lot of pressures as demand and supply are both working against corporate profitability. So again, the average is only meaningful when the pool is somewhat uniform. But again, if you have one hand in hot water, one hand in cold water, the average temperature is kind of irrelevant. And I think right now what we're looking at is two different pools. One pool is how is the information age doing versus how is the industrial age doing, those types of companies, and what does that economy look like as we move forward.
And from our previous conversations, I think even though we're going through hard times, but the belief is we're going to be doing swimmingly well very, very soon.
Yeah, and I think one of the questions that comes up quite a bit is, as the Fed continues to provide all this bridge loan, ultimately how we're going to pay for it. And I guess somewhere along the line that's going to be a discussion for the next chapter. But when we look at the world going forward, I think that there's a lot to be encouraged about as we start to move into the summer months, as we start to get through some of these cycles of the gradual opening up of the economy. With a state like Georgia making the decision to open up, last week or, as we got into this week, I think the nice thing is within a couple of weeks, we're going to start to know how successful that was, and that'll give us some more inclination in terms of how we continue to progress going forward. If the states that are starting to open up for business slowly have success, then we could see things continuing to move along in a very positive manner. If they don't, then obviously things can retrace and we can move in the other direction. But the other thing that I think is worth speaking about is how the world is changing and how a lot of the virtual world concepts will continue to stay relevant. I find it interesting when you look at some of these places like gyms, for example. They're now conducting a lot more workout sessions and classes through virtual medium. When everything does go back and people start actually visiting these places, it doesn't mean they're going to shut down their virtual networks. It just means that they're going to look to change their business practices, and I think we'll see more of an all-of-the-above approach. I think it's also impactful that a lot of people are doing, home health care, nails, hair, things like that, or massages where they're making a lot more house calls. So I think people are going to also engage differently and change their business practices, and I think a lot of that will also change the way that we engage as we move forward. So again, I remain rather optimistic. As always, markets can move up and markets can move down. No real projections for the short term, but I feel pretty good about where we continue to go in terms of optimism from here.
Michael Zaremski, head of U.S. Private Banking, Bank Leumi USA, member of the investment committee for Leumi Investment Services. Thank you for being with us. Look forward to speaking with you again.
Thank you very much, Zev. And again, thank you very much to all the healthcare people that have been at the front lines helping us navigate through these difficult times. Appreciate it.
And keep safe. Keep safe. We're going to be right back. Don't go away.